Welcome back, guys, to the entry-level trading course by Valetax. This is episode 4, Introduction to Candlesticks and Price Action. My name is Ryan Ifere, market analyst and internal educator here at Valetax. And today we're going to be continuing from chapter 3, and we're going to be looking really at how price moves, chart movements, and an introduction to the anatomy of candlesticks. So sit tight and pay attention. The chart simply shows price movements over time, and every movement on the chart represents buyers and sellers interacting. When buyers are strong, prices rises, and when sellers are strong, prices falls. Charts basically visual representations of human behavior, and that is why candlesticks tell a story. Each candle reflects the complete battle between buyers and sellers, strengths versus weaknesses, and the amount of momentum or acceptance that a particular side has. So we have bullish candles and bearish candles. The stronger the bullish candles are, the more idea you have of how much buyers are in the market compared to how much sellers are in the market. What the price strength or acceptance is for the buyers relatively to that of the sellers. The anatomy of a candlestick. So every candle has 3 major parts. We have the open and the close. We have the high and the low, and we have the candle body. So if the buyers push prices up here, means they were trying to take control of the market but failed to take control of the market. So the sellers continued to bring the prices down. So hence why this becomes the high of the candle. So the high of the candle is simply an area where buyers try to, show their necessary involvement in the market on a bearish candle. Now, similarly, it happens for the buyers. The low, but this time around inversely, the low of the candle is an involvement of sellers into the market to show, their presence. So it means that when the buyers opened the market here and we're trying to go up, sellers sold off a bit, and then the buyers took charge again and pushed the prices up until this high. And on the high of the candle is the highest point in which the buyers got to before sellers came into the market again. So for a buy candle, what creates that rejection is a total occupancy of the market by the buyers and the involvement of sellers into the market, and then they push prices back down. Now that creates the closing price, and then the high of the candle for the bullish candle is created by an involvement of sellers, while the high of the candle on a bearish candle is as a result of the involvement of buyers. Now the low on a bearish candle is as a result of the lowest point possible that the bears could get to on that candle and the involvement of buyers to reject them to that prices and bring them back towards the close price of the candle, the closing price. Okay, so this is the close. This is the closing price. Similarly, the low of the bullish candle is, like I said, it's just what you do is you inverse it. Yeah. So how this happens is how the high of the bearish candle happens, and how the high of the bullish candle happens is how the low of the bearish candle happens too as well. So for the low of the bullish candle is an involvement of what? Sellers into the market. Yeah. So sellers pushed them all the way here when they opened, because this is the opening prices of the bulls. So when the bulls opened, sellers involved themselves, pushed the market to the low point, and then buyers took charge and then went all the way up, and then sellers come. So at every point in time, due to the interaction between buyers and sellers on every candlestick, that's what creates the highs and the lows. That struggle between the buyers and the sellers creates the highs and the lows. Okay? So Now, next thing we need to look at is the body. What does the body of the candle say? Now, the trick to this is there are going to be bigger candles and there are going to be smaller candles on the chart. Okay? But the real flex of it is the bigger the body of the candle, the more momentum of either side it tells you or it shows you. So if we get a bigger body candle, like take for instance, this candle has a bigger body candle than this previous candle here. See, this is small. So this shows you the strength than this one does. It shows you lesser rejections than this one does. This rejection is bigger. So this gives you an idea that there are aggressive buyers in the market. There's more bullish sentiment. There's more bullish prices in the market. There are people buying more than people selling in the market at that particular period in time. But you see for the sell candle, this looks very tiny. So this shows you that the sells are what? The sellers are not that much. So that's how we use the body of the candle to really describe and understand what prices are telling us in the market. Okay, so these are like the three major things that you need to know for a start. Okay, the bullish and bearish meaning. Okay, large candles, strong participation, like I said. When bullish candles are coming in and they are large, there's now buying dominance. It's showing you that there are a lot of people in the market who want to buy more. Then when you start to see bigger bearish candles, it starts to show you dominance, sellers more in the market than the buyers. So large candles just basically show you influx of participation and strong availability of liquidity in the market at that point in time. Now, let's talk about reusing candlesticks to study market emotions, and we're going to take it as it is on the slide. Price action. When we talk about price action, we're not just talking about prices. We're talking about how they react and how these candlesticks show us. Okay, so long wicks show rejections, and small bodies shows indecisions. So if, for instance, we see a candle that looks something like this, okay, and say this is a bearish candle, okay, and this is a long rejection. What this shows us or tells us is that for some reason, this was previously a buy candle, okay, that was going up. But then what happened? Sellers came into the market and took over the candle completely. So this candle moved from a bullish candle into a completely bearish candle. What this shows us in that emotion right here is that buyers couldn't take control or continue to move the market above a certain level. So sellers came into the market and pushed them heavily. That's what long wick rejection shows. So it shows a rejection. Now, small body candles are candles that look like this. Now, this type of candles, they show you an indecision or a candle that looks like this. It's called the doji candle. Okay, so we're going to look at types of candlesticks in future episodes. So this kind of candle, a doji candle, basically shows you indecision. Now, what is an indecision on a candlestick? It simply is, or you can simply put it as the undecisive struggle between buyers and sellers to form a specific direction in which the market should go to. So there's been so much interaction and a drag between the both of them, and nobody could win that tug of war. So they ended up closing at the same level. So usually the open and the close are almost at the same point, just slightly from different points each. But you can easily tell first that the high and the low are almost equal, and the open and the close are almost equal or equal. So when they're equal, it looks just like a cross. Now it's called a doji. A doji candle is an indecision candle. Now, strong closes, on the other hand, shows conviction. So let's say we get a bullish candle open and closes completely bullish with just a small rejection at the top. Now, this candle opens whole and closes larger than the rejection itself. Now, this brings about optimism in the direction of the market. So when we see a bullish candle like this, we know that there's so much strength in the market, or the prices are showing so much strength, and the chart. So if, for instance, the market was very bullish in sentiment and we're getting huge buy candles of this nature, then we know that yes, the market is actually following its lead to stay bullish. That is how we understand. We use candlesticks to read emotions in the market and the behavior of the market. And this brings us to the end of understanding the first part of how candlesticks work, and we'll look at the different types of candlesticks in future episodes. Remember, this is just an entry-level trading course and Forex for beginners for a start. So I'll see you in the next episode, and thank you for staying tuned.